Tandon joins us. Let's talk markets, his new fund offering. What is he planning to buy in his new fund? How much money he's raised? Okay, what are we starting with, sir? How much money NFO? And so far, what's been the response? Let's start with it.
So, Nikunj, we are in the process of launching. We launched our cycle funds, and now we are launching a couple of thematic funds because it is based, as you know, we believe in market timing and we believe in thematic fund, which is generally perceived more risky. But if you can time the thematic fund, then you can generate extraordinary alpha in that. So we believe that that liquidity cycle has already bottomed out last year, November, December. Risk appetite cycle should ideally bottom out between July to September. So we have been talking about a phenomena that we are coming closer to that event. And then everything start looking good for particularly for India perspective, irrespective of whatever last 1 month move we have seen. So once you're looking at the data points coming in your favor, then the probability of you making extraordinary money in these sectoral themes should be a good opportunity. That's the way we define our logic or thesis of launching multiple sectoral funds.
That's interesting. Sandeep, so tell us, when is the NFO closing? Give us some more details.
So this is a BFSI Quant BFSI fund is there, which is more of a banking financial services. But the way we is closing on 14th of this month. The way we looking at banking is one anyway everybody can capitalize through various names. What we're trying to do differently is about the fintech aspect, because we believe technology is changing. So we are thinking when technology meets the trust. So that's the way we are defining the thesis of this fund, where we are trying to look an opportunity on the neo banking side, digital banking space, or anything related to a technology aspect which can enhance the BFI space. So those are the companies which we are targeting, and some of these new age companies have also corrected a lot. And maybe going forward, we might get some of these opportunity also, but that does not mean that we'll participate in a very expensive name. Some of the names are still very expensive. So it's an opportunity which we are looking at how well we can combine the digital banking or the normal banking along with the technology. That's the way the thesis of this fund.
Right, Sandeep. So, just wanted to understand from you in further detail in terms as to what has been, the underlying thought process as well as the overall theme for the fund.
See, the way we look at it that, we have been very vocal about that India is in a very unique situation. I have been talking about manufacturing as a very larger thesis. So we said this decade belongs to India, the half century belongs to India. With that background, you look at, obviously this is much larger perspective. Then we also try to look at the various cycles. So when we talk about cycle, then we specialize in looking at the quant analytic thesis, which we build by analyzing hundreds and thousands years of data. So we have been talking about a volatility expansion phase between 2018 till 2023. What we said that it means this is the period where volatility will remain elevated. Now we are in the culmination phase of that, which means that in 2018 we expect 2023 the volatility will give you a last spike, okay, which means market can correct a bit, and then volatility will settle down for few years perspective. And that is the opportunity which we are trying to capture, that when volatility settled down. Today, what is the biggest challenge in last many years? Market has corrected also, market has rallied, but market has been very volatile. That has not kept the confidence of most of the investors because people are generally worried. So we believe that even the volatility cycle will actually peaked out by September. So we have said between June to September 2023 that cycle should peak out. It is very difficult to pinpoint exact dates, and but we are closer to that event, and that's the reason we believe that once the volatility starts settling down and risk appetite also start inching up, and liquidity anyways in our favor, that could be a good combination for multiple sectors. So that's the reason this thesis of cycles funds or any sectoral fund which we want to launch, because this is a see so far we have only seen a big trend in the capital goods space. If you ask me, capital good and industrial is one area in last 2 years particularly the sectoral thesis has played out very well. I think now time is coming in this period. We are looking at that multiple sector opportunity will re-emerge, and that's the area we want to capitalize instead of just looking at the Nifty or the frontline indices. I think this is the area where you generate extraordinary alpha in next few years.
So
So, Sandeep, give some color on, given the theme of this NFO, which are the stocks or companies you think are best positioned to benefit out of this theme?
So, as I said, when we talk about cycles theme in general, I think cycle, as I said, being a thematic fund, the cycles or the thematic fund, the advantage is that if you can time it better. So, we are saying that once the volatility settle down, which we expect in next 1 quarter on higher side, once it settled down, it should lead to a multiple opportunity. So far, if you look at is the Nifty has been very skewed. Okay, as I said, last 1 year it is largely the capital goods space has done well. So when we're talking about sectoral themes which keep emerging, so pharma is another area which is emerging. Telecom could be another area which is emerging. Metals is again a very beaten down name. That is another theme which is could lead to some of opportunity. Textile is another area which is opportunity. Something maybe not technology on immediate basis, maybe down the line, maybe few months, that could be another area. Ideally, it should reach the neglected zone. It is now approaching that neglected zone. So is the case with some of the BFSI space also. Some of the stock has got into many like significantly overowned state, and they have been underperforming for a while now. So I think I expect in this correction there could be some give up in these name, and that could lead to buying opportunities. So there are multiple themes which we are looking at over a period of next 1 quarter.
Sandeep, you've raised what, $1.5 billion in this NFO so far?
Our total AUM is around $3 billion. Okay. This is just, it's open, last cycle's fund we raised 180 odd crores. Okay. See, Nikunj, we are a smaller, a very young mutual fund. So no question of raising $1.5 billion. Total AUM is around $3 billion.
Beg your pardon. I mean, total you have $3 billion. How much is debt?
97% is equity.
Okay. Great. And your returns have been how much in 3 years?
See, last 1 quarter or so, we relatively some amount underperformance because we have been cautious on the market. But in last 3 years perspective, we are the top of the chart in terms of all the categories which we operate. And what is more interested in the outperformance is one aspect which we are very happy and satisfied is that what we generated superior risk-adjusted returns. So if you look at the risk-adjusted return, we are the best in the industry.
You had a lot of Adani group of stocks, and we've discussed
some point
this.
In time, yes.
Have you sold them, and would you be looking at buying them again, or you want to be avoiding Adani group of stocks as a category now?
See, I tell you, we don't have any love or hate relationship, any stock or sector. That's the way when we talk about very dynamic style of money management. So we bought Adani Enterprise as a more of an index play. So last year when it became part of the index, somewhere in October, mid-October, we exited Adani Enterprise. But we are holding Port and Ambuja. But we bought Ambuja when it was not part of Adani group of the companies. It was an MNC company in those days. Okay. Yes, purely from a risk management perspective, we have pruned down or rather exited both Port and Ambuja in January. But what is very important to understand is that risk management is very important. We don't have any emotional attachment with any sector or stock or any group. Okay, so when we see data points are changing, we believe this. The hype which was getting built or the perception which was getting built has somewhere dented. And that takes time to rebuild. So we are not as such negative. If this is an opportunity, we are not very reluctant or allergic to any group, but see at that point in time. But as of now, our data points are not that constructive to rebuild the exposure from the current levels.
Okay. Sandeep, let me divide the market in two parts. One, where there is excitement and little value left, and B, where there is no excitement and there is a lot of value left. Defense is one category where there is excitement and no value left. But similarly, if I look at, let's say, NBFCs, if I look at, good old AMC stocks or insurance stocks, there is no excitement, but there is a lot of value. Let's address both these themes, defense and insurance and AMCs.
So I completely agree. Defense is one area which I think good amount of euphoria we have seen. And I'm also very skeptical at the current level because purely from a valuation perspective does not give. And these are relatively illiquid. If you look at even from a liquidity analytics point of view, we have seen extraordinary liquidity in these names and people are chasing these things. So some amount of risk appetite is also high. So it's could be a, I will say, a deadly combination that one should not look at these names on the current level. So that does not mean we are advising any shorting or exiting, but we are not going to be buyer at these levels. Now, if you look at the AMC aspect, I think the recent SEBI circular is still not very clear what is the final outcome. So one has to look at, and I would like to wait and watch and say what is the outcome, okay? Because whatever guidelines have come, if it is adopted in this manner, then I think the entire AMC business will be derated, so the downside is much more, okay? But it's too early and too premature to comment on that, because once these guidelines, because I think industry has represented, we have also represented the pros and cons for whatever is coming, because we are very vocal. If this is implemented in this manner, there will be good amount of arbitrage opportunity, because you look at one side, mutual funds are asked that you have to pay you have to be taking care of the brokerage and STT both. Okay. And then you look at as a trader, because the whole life we have done good amount of arbitrage business. If I'm a large trader, then I will trade through mutual fund, because neither I have to pay any STT nor I have to pay any brokerage. It's a great arbitrage opportunity will available. I think the balance sheet of the many mutual fund will be wiped out. It is implemented in this manner. So one area I think a lot of people have not understood, because if this implemented in this manner, create massive arbitrage opportunity for a trading clients at the cost of mutual fund AMC. They will be making money. So investor is not going to getting benefit out of it. Rather, only trading mindset people will getting huge benefit out of the proposal. So I like to wait and watch and see how it unfolds.
So if somebody says, look, I've really enjoyed this interaction of Sandeep Tandon with Etina, I love the way he's invested. Here's my big fat check from a family office. If so, hypothetically, somebody gives you a 100 crore check, which you're free to invest whichever way you want, but you have to double the money in 3 to 4 years. How would you invest?
So I said that
looking at your track record, that is easy. Bhai, track record to hai.
Fair point. Fair point. But Nukuj, as I said that for the family office, the risk appetite is far higher than the real retail investor. And as you clearly defined, they have horizon for let's say 5-year horizon. It's a good horizon one should have. I think sectoral funds will give you the best return. That's one of the logic which we talked about. It's not about since we have launched these funds, so I'm talking about. That's not our mindset. I'm very candid and very vocal about my views, because it's a data-driven view which we try to give, rather than saying this is my personal biases in any manner. I think sectoral themes. So if you say that this decade belongs to India, once this volatility cycle settled down, I think many more thematic opportunity will emerge in next few years perspective or next few quarters perspective. I think thematic is the one area. If somebody wants to look at the concentrated bet, I think time is now coming. So relatively more apt time to build the more concentrated bets rather than having a very well diversified portfolio. So that's the advice which I like to give.
Okay. Sandeep Tandon, appreciate your time and thank you so very much for joining us. Let's take a break.